Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 18th, 2024. We are doing this during the Synergy Trader event. So if you're listening to this, the recording of this, all the recordings from the live presentations will be available on YouTube and Timing Research as well very soon, if not already by the time you're hearing this. So we are recording this at 1 p.m. Eastern Time, and this is episode number 455. So for today's panel, we have Harry Boxer and John Thomas, and the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, great, David, and good to be here with everybody. Hello, Harry. Hello, John. How are we today?
Excellent. Thank you.
All right. Now, we had good pullbacks here in some of the indexes I know you guys are good stock pickers. We'll get into that. I just want to get a little broad view from you with regards to your opinion. We had pretty good pullbacks on the E-mini future down about 58.70 and the QQQ down about 495. Looks like we're trying to reverse off of that. Do you guys have a feeling like the pullback's over and we're going to rally into Thanksgiving next week, or do you think there could be more chop? I'll start out with John. John, what do you got?
Yeah, I vote for more chop. First of all, you have gigantic short-term profits capping the upside. A lot of people are taking the money and running and waiting for the next substantial pullback. Other people are taking the money, running, and never trading again. They made so much money last week. So I vote for chop. I have call spreads, which are the perfect position for chop because you get all the money on the time decay and the volatility decline.
Right.
So I vote for chop, but into the year end and whenever the year end starts, which either is the beginning of December or the middle of December, I think we take a run up to new all-time highs.
Yeah, that VIX had a spike up towards 17, and now it's backed into the 15 handle, huh?
Yeah, and more importantly, it's down from 22 pre-election.
Yeah.
So
people are comfortable.
Yeah,
people get comfortable at this kind of level. They're not, they'll buy stock at this level. They'll hold stock at this level,
Well, more important, we have last week lows to trade against, which we didn't have last week. So, the general feeling is people are underweight. If they aren't underweight, they were out of position for the sectors that would rally on a Trump win.
Right.
So there's a lot of readjustment that needs to be done. And, it's, if you ask me, you sell this year's winners and you buy next year's winners.
Rotate.
And that requires a massive sector change and sector weightings in the market.
Right. And whenever you get a spike like that, John, don't you sometimes look at it as maybe an order imbalance that the market makers are taking advantage of? And after they finish taking advantage of it, if there's no volume behind it, it almost has to back off?
That's almost always what happens. And a good rule of thumb for me is when you get an out of the blue move like this, you let it give up half its recent gains, and then that's a good place to get involved.
Right.
Or if it gives up all its recent gains, then it's not a sustainable move. And we're going to new lows, but we haven't seen that yet.
Yeah. Harry, how are you feeling about the pullback? Over, chop, a little more chop, or rally to Thanksgiving and all the way through the new year?
Well, you know what? I'm a short-term trader.
Right.
But I have I look at all aspects of the market from every time, time standpoint, every time period, whether it be shorter or longer term. But and I totally have total respect for two people in this world that are technical analysts. One is Tom DeMark. Tom is kind of my mentor, even though I'm older than him, believe it or not. I've been following him for years, and he's as good as anybody out there. My friend Avi Gilbert, who used to be a subscriber in my site years ago, and I encouraged him to get his own site, and now he has 8,000 subscribers. He's very influential Elliott Wave guy. Both of these guys are looking for a high. Both of them tell me the market could make one more higher high in the low sixes, 60 6,300, something like
Right.
that before the market rolls over. On a short-term basis, if you look at the recent low around Labor Day, the market went from 5,400 to about 6,020 or 30. So about a 6-point run up, 600-point run up on the S&P, and it did it in 5 ways, perfect Elliott wave formation. This rollover has come down to first support and bounced. There's a big gap from a few days ago, 57, looks like 75 to about 58, 55. So about,
Right.
you got about an 80-point gap in there when they had that big up day.
Yeah.
To me, technically, as opposed to what most people think, that gaps need to be filled, I totally disagree with that. That gaps will be filled eventually, but they don't have to be filled right away. So
Oh,
my
no.
point is, the gaps often are key support levels. And so
Yeah.
I'm looking at, if you look where the market came down to yesterday,
Yeah.
Friday, it came right down to that gap area, and not only from the gap area, but the prior couple of 3 or 4 attempts at getting through 58.50, 70 zone, where there was multiple tops. Once
Right.
tops are broken, on the pullback, they become support.
Right.
So I think the market bounces from here, but there's also some real resistance at 59.50, give or take 10 points. That if the
Right.
market doesn't get through that and then rolls over, the market could easily come down hard into the 5800, 57.50. And the key level for me right now, multiple week support lows, 56, 50 to 75. If the market goes below 56, 50, 75, I think that there's a big problem, and that the market could head lower immediately. But right now, the jury's still out.
Right.
There's too many people that are bearish, in my opinion. So I think they need one more squeeze to squeeze out the shorts that have gone short too early, and then they'll take the market down. But it's going to be a tough call. But I play day to day. I play it intraday.
Right.
Right now, today we had an amazing amount of stocks to explode from the get-go and run, and they were great day trades today. But I would
Right.
watch 2 stocks here. Tesla's been unusually strong, and Nvidia's been unusually weak. And I think if both stocks start to head down and break key support levels, and then made 2 major components other than Apple, and you can watch Apple too, but those 3 in particular, if they're breaking major support levels, if they're rolling over and breaking trend lines, then we have a problem, and the market may come substantially lower. So I'll go short. But for right now, my number one philosophy is never stand in front of a runaway freight train.
No.
Okay?
No.
You could get run over. So
Now, Harry, as far as Avi and Tom are concerned, did they give you any kind of a time frame? Because sometimes they have price
Yes.
and time figured out.
yes.
Their
Yeah,
price
and
around 6,200. Their time.
Well, one guy's saying in 61.50, and I think Avi was as high as 63.50, but he's got a kind of a zone that's maybe 60.
Yeah. Well, who wouldn't? You can't pick the number. But
Yeah,
what about
no,
the time? What about the
exactly.
time frame? December deal? Maybe January, February? What are you thinking?
Well, no, I think they're all thinking, and I think the same way, because to me, I'm 77 years old, and I've been doing this for 60 years. I can tell you right now that it's amazing how many times a market will peak out on January 8th to January 12th.
I
In other
got you.
words, it's amazing that you get a year-end rally, it spills over to the beginning of the year, everybody's excited, and then the market comes down, and maybe comes down to February, and sometimes through into May, depending on whether it's a major bear phase or it isn't.
Right.
So for now, I tell everybody, you got to let the market tell you what to do. You can't just
Yeah. But
You
these
really
guys
can't.
are thinking maybe in the January, just late December, January, February type of frame, that 90 days.
Yeah, yeah, I think it's more like between the first week of January and the end of and January 20th.
I got you. Sometime in January, where
Yeah.
the January effect will be met with some probably some market maker selling at high prices, kind of like we
Right.
just saw. But
Yeah,
this time it won't
again,
hold the supports as it comes down.
it's all theoretical, and it's
Oh
all
yeah.
conjecture until we see exactly what the
No, like
market
I
does.
say, you have to follow the tape as it comes out. But a little broad strokes never hurt anybody,
And also, I got to tell you, my main philosophy also, I tell us every day to my members, do not trade an individual stock on what the market's doing. Your individual chart patterns may be much stronger than what the market's doing. I can't tell you how many days the market or the Dow was down 3, 4, 500, and we had stocks that were going up 20, 30%, 50% in one day. It depends on momentum, depends on what. If you're playing an individual stock, you cannot sell it because the market's going down. You can't. You got to wait till it's either stopped
Right.
out based on individual chart patterns where the support, the resistance, the trend lines, and the moving averages are.
Hey, John, as far as stock picking is concerned, that's your forte, whatever that means, forte. Give us some ideas of some of the areas you're looking at. I know you used to like Goldman Sachs a lot with all this deregulation and all this merger mania. Are you still hot on them?
Well, I'm still pissed off at them not offering me a job 50 years ago. But be that as it may, Morgan Stanley ended up hiring me in the end. The simple investment theme is out with the new and in with the old.
Okay.
You want to dump anything that needed lower interest rates. So that's housing, home builders, real estate, REITs, bonds, gold, and silver, which have had a great year up until
what about energy? What about energy?
I don't want to touch energy. If you're going to crash the price of oil with
Right.
subsidized overproduction, you don't want to be anywhere near the energy area or commodities in general.
Right. The Goldman Sachs commodity.
The winners are deregulation and the end of antitrust.
Right.
So that's Goldman Sachs, number one, Morgan Stanley, JP Morgan, Bank of America, Citibank, BlackRock, and then uranium plays is your energy play, not oil.
Right.
Uranium is a huge deregulation play. If you ease or eliminate permitting requirements for new nuclear power plants, that business will just rocket. And this is happening at the same time that Russia has banned uranium exports, and the world's largest producer, Kazakhstan, is cutting production back 10%.
So that means there's going to be a tight supply, and then bam, the price can go.
I think there's going to be panic buying in uranium once people figure this out. So,
so you think this little pause to refresh we've seen in Kamiko would be a pretty good opportunity?
Buy. The initial sell was because it's a commodity, and all the other commodities got crushed. But notice that only Kamiko came back.
Yeah.
So and other uranium plays,
right.
VFT, for example, had a huge move. So I think the future is in nuclear, and you can take that from a former researcher for the Atomic Energy Commission.
Yeah, I think
job out of college.
Yeah, that's a good broad view, no doubt about it. Anything else? The consumer discretionaries, how do you think they're going to go?
No, low margin businesses never attracted me very much. Walmart's had a great year, but you could just as easily have bought Walgreens, which got kicked out of the Dow average. So
with regard, one other thing I was going to ask real quick is, what about these other areas that might be interesting with the dereg and all that?
Well, absolutely. I mean, for the brokers especially, they're getting it on both sides. Deregulation will cut your legal costs for the big guys by hundreds of millions of dollars. I mean, I used to run a small hedge fund, and my legal bill was $1 million a year. So you can imagine what it is for a Goldman Sachs or a Morgan Stanley. But also on the income side, the most profitable business the big brokers have is mergers and acquisitions.
Oh yeah, a lot of juice in that.
You take the restraints off that, a couple of phone calls and you make $100 million. I mean, that is a fantastic business to be in, but not when all of your proposed mergers get canned by the U.S. government.
How about companies like Blackstone and
anybody who's regulated in the financial area?
Yeah, Carlyle.
Carlyle, Apollo, all these guys.
They're going to benefit.
Even your local investment advisor will benefit enormously from a backing off. And you don't have to pass any new laws. all you have to do is put a hiring freeze on the SEC, and that's what they'll do if they don't fire half of the staff. And, that alone will greatly reduce the number of audits and compliance reviews you get. On the other hand, fraud and theft is about to enter a new bull market. I mean, there's a reason why we have an SEC. So without the cops, you pull all the cops off the beat, crime goes wild.
Oh, no doubt about it. No doubt about
just
it.
don't get caught in one of these scams, which are proliferating at a tremendous rate.
And do you have a feeling on tech? You like semiconductors over the software stuff, or which ones? What do you think?
To say that Trump hates California,
Yeah,
hates the West Coast would be an understatement.
right.
So he initiated antitrust proceedings against all the big tech companies in his last administration. If you look at his FCC appointment, his primary goal is to rein in big tech,
Right.
and enforce new rules against censorship,
Right.
and ban TikTok.
So you're saying basically the Silicon Valley stuff could be in a little bit it could be muted. Could be muted.
Dark clouds are forming over Silicon Valley. I can see them from here. And if you're going to buy a bunch of new sectors where you're overweight, like banks, brokers, and money managers,
right.
What's the best thing to sell? Your top performing overweights.
Right.
Like NVIDIA, like Meta, like Microsoft. So, we're already seeing it in the prices. NASDAQ has notably lagged the market for the last 2 weeks. So, always listen to Mr. Market. He's never wrong.
Now, Google's been lagging in this, let's call it 175, 185 area, 170, 180 area. Where does it break out? Does it break above 180 and get running towards 200? Or is this thing got some problems and it's going to break through the low and start testing that 145 again?
I would say that tech in general is a big unknown right now.
Right.
Long term, AI and all of this stuff will massively contribute to profits. But short term, there's a big question mark over the whole area.
I got you. Hey, Harry, I know you follow a lot of stocks, and especially with your short-term trading. And sometimes they used to be, as I remember, a lot of biotech or something to do with the, with the healthcare area. Are you still following a lot of those as well?
Oh yeah, I do. But I got to tell you, it's not because of Robert F. Kennedy being potentially appointed. And I have my opinion on the guy. I think he's fantastic, but everyone else thinks he's a nut. So it's whatever. Look, the biotech sector is something I follow closely, more so than healthcare. I think healthcare is more in trouble than biotech. But the problem is at the tail end of every bull market, the stocks that have been overblown value-wise usually are biotech, because those are the ones that have the bigger risk reward. And when they go, they're phenomenal. And when they, implode, you see them go down sometimes 80 or 90% in a day, depending on a bad drug trial or an FDA unapproval or something like that. So, so I'm much more interested. And if you take a look at the biotech indices, right now they're breaking down, and I'm concerned because not only that, but other areas of, and I'm a bit even though I do agree with John about uranium. Some of those nuclear energy stocks like SMR and OKLO and NNE and the other VST. I love those four stocks, in particular VST, which is the leader for me. If you take a look at that chart, VST.
Yeah, Norbert loves it.
Look at it, and it's breaking out today. It broke out to a new all-time high today in the midst of all. So I think that could be 180, 200, 215, 220 in a fairly short period of time. If you take a look at the run-up in September alone, when it went from 69 to 140, literally doubled in a month, I think it could do it again. I think it can go from 112 to 225. I'm not kidding, and it's probably halfway there already.
Yeah. And you had a chance to buy it on the pullback against the blue line there. Huh?
Exactly. So getting back to your question to John on Google, I'm a technical analyst. I look at the chart. To me, take a look at the one more time. Bring that chart up.
Yeah, I'd love to see it.
I want to show you something. Google. there's an inverse head and shoulders there, left shoulder, head, right shoulder, a neckline that was broken. It
Right.
exploded. When it broke, it exploded and pulled right back to the neckline.
Right.
And then it bounced right back to the prior high and backed off. It's making a slightly higher low here. This is an extremely bullish configuration, not bearish. Unless it breaks the neckline of the breakout point, I think that's about 120. Let me bring up my chart. Gee.
What about 165, 160?
Yeah, I have to tell you, I don't buy the bearish argument on Google at all.
I
Yeah.
agree.
The fear is that artificial intelligence will put them out of business. If anybody knows more artificial intelligence, it's Google.
Yeah.
And by the way, they just expanded their Waymo robo taxis to
Yeah.
Los Angeles.
Yeah.
So now you can sit in traffic in a robo car.
So getting back to the technical aspect, you have an inverse head and shoulders. And if you take a just step back and look at the long-term chart from the 22 low, it's gone from 82 to 197 or 200, basically 120%. It pulled back in a very orderly five-wave decline to the trend line exactly, bounced, formed an inverse head and shoulders, and now it's broken out. And if that ever gets above, if the market, for example, holds and goes higher, and Google gets above 184, it'll probably blow through 194 and run into the 220, 225 range. That's my intermediate target for it. And it's had it's in the fourth wave anyway, so it will do for a fifth wave that either retests the high at 193.4 and fails, or breaks through it and runs into the low 200s or more. Again, I agree with John. I don't. If there's anything technical, and I'm a technical analyst, I wrote a book on technical trading. I can tell you right now that me, the one thing about technical analysis is that you don't need to hear anything about the fundamental BS that everybody's talking about. This price will tell you what to do. The chart will tell you what to do. The technical indicators will tell you what to do. And if you trade on fundamentals, is where you get hurt, because people tend to get excited about fundamentals. I don't get excited about anything except when I'm looking at a chart breaking out or breaking down. In the case of Google's one of the better technical charts right now.
How about just throw up before you get into the other stuff you're getting into? There was one IBM had a big pullback. Is that a deal down here, or is it a game set match for IBM?
Well, what I want to point out about it is it based out for several months in a coil pattern. I mean, several years. Sorry, and then it broke out at the end of 23, and it's had a 1, 2, 3, 4, 5 wave basic Elliott wave move to the top of the long-term channel from last 2 years. So the pullback is warranted, needed. Is it technically okay? As long as it holds the prior double top, which is about 197, 198 range, that's the support right now. And it can continue higher. And if it does continue higher, my target's 250.
Yeah, that's what I'm trying to say. It's hard to get good stuff on sale. So that's what I wanted to bring that out and just get your opinion, because it's definitely been a great stock.
I get it. But the only thing that bothers me about it is the underlying technicals are belying the trend, which means they're not confirming the trend. They're like, just, this is a sloppy chart from a technical standpoint, So I would be careful, and I would stop this one, anything under, say, 198, 200.
Yeah. What else you got cooking over there in biotech land?
Well, I'm not right now. There's only one stock I really love, CAPR. Take a look at this chart. It literally went sideways for 5 years. Okay, it exploded with a major breakaway gap on volume and went vertical. Okay, right now it's in a flag formation, and it's been doing that for about 6 weeks, 7 weeks. I'm waiting to see whether it breaks down or up. But I'll tell you right now, above 2340, this could be 30 or even 40 or more. And from what my people are telling me, that institutional clients of mine that have taken a look at this company, their portfolio of drugs and what they have going is phenomenal. And they're talking triple, quadruple from here in the next year. They think it's a home run. We'll see. I mean, right now that's a stellar chart, unless it breaks down, of course. So like anything else, it looks good until it doesn't. So I would say that under 15 and a half, you have to lose it. But over, if it gets back above the moving averages and back above the current resistance, which right now comes in at 20 and a quarter and then 23 and a 40. Those are levels to watch on this one. But that's, to me, a pick for a home run over the next several, months. Again, provided we don't go into a major bear phase.
How about what are you thinking of Summit?
SMMT?
Yeah, SMMT had a big move, had a pullback. I haven't watched it lately. Did it get back on the horse?
Not yet. It's still in a coil pattern, moving sideways, drifting. And there's a gap support from September at 1595.16. It's above that. It's near 19 right now, but there's key resistance for me at 25 and a quarter. So it's in between, and it's in a coil pattern that's moving sideways, and it has been for 90 days. So there's nothing to do until it makes a move either way. But
Yeah,
from a
it's in
long-term
a range.
standpoint, and from a long-term standpoint, if you take a look at the move it had off the May spike low, it's been 1, 2, 3, 4 waves up, and I'm looking for a major fifth wave, and that wave could take it literally. When you look at the word connecting, just connect the tops and connect your channel, and you'll see it projects to 70 to 80. I'm not saying it's going there. I'm saying that's a possibility, especially if it takes out the recent high in September, which was way up there when it spiked up into the high 20s. So
Yeah.
33, above 33, 34, it could be a home run too.
How about Viking?
No, it's amazing how many people in my room are following this stock, and they all think it's going higher, and they all think it's an acquisition. Everybody.
Well, I mean, that's what they say, but it doesn't act like that now, does it?
No. As a matter of fact, at one point, when this stock exploded back in December or January of that last year, I put a swing on it, and it really worked for us. It went from 14 to 90 inside of about 2 or 3 months. But you can see that it's gone sideways for like what, 9 months now, and it's recently broken down. I'd be really careful with this stock because it's right on long-term support. And here's the problem with this stock right now. It's come down from 82.3 to 48. And yet, if it breaks here, it's vulnerable another 10 points. So this is and anytime you get a biotech stock with like 100 PE or something crazy like that, because of the excitement around their drug, and they really don't have any earnings, and maybe not even much revenue, and yet they ramp the stock up into the 70s, 80s, and 90s. It's always dangerous when the market turns down, because what happens with biotechs, in my experience, is no matter how good the story is, when it comes to valuations and a bear market, if a bear phase or bear market sets in, biotechs get crushed. The ones that don't have earnings, the ones that aren't really in a growth phase, other than what they have in the pipeline, possible drugs with maybe even an FDA approval. But if they have the FDA approval, but it hasn't come to market yet, there's no revenue generation yet. And that's the problem with biotechs. They're the first ones to go in a bear market.
And also when you got an anti-vaxxer coming in with a hatchet,
I got to tell you something. Everybody thinks he's look into it. He's not an anti-vaxxer.
Yeah, I don't think so either. To be honest with you, I should take that back. That's all what everyone's saying. That's all what everyone's saying. And the people saying it are probably the lobbyists at the drug companies. You know what I mean?
I know, but
well, I'm also saying it. I'm a biochemist, and I can tell you he's an anti-vaxxer.
Okay.
Period. End of story.
Well, John, what he was saying was he was an anti-vaxxer during COVID because he hated the fact it wasn't tested properly, that it takes 3 to 5 years to properly test drugs. We all know that.
Oh, they did rush it. Yeah, they did rush it.
In 9 months, they rushed that to market. And there's a lot. Let me tell you something. I got COVID twice. I have a cough for 2 years since then. I think those vaccines, I kind of agree that they were needed. They were a must to save a lot of lives, but they weren't tested properly, and there's a lot of side effects.
Now, what about these bigger stocks that have had pullbacks, Novo and Merck?
Well, first of all, I know Merck and Bristol Myers in particular, those two, because I'm a Jersey boy, and they're both Jersey companies. Right. In fact, Bristol Myers started in Hillside, New Jersey, my hometown, and 15% of my class that graduated went to work for Bristol Myers. So I know the company very well. I love that chart. Now, take a look at it. It had a big downtrend. It broke out of a base, and it ran up right to resistance and backed off. Compared to Merck, which is the exact opposite in a downhill racer. Now, Merck is way oversold short term. It's dropped from 133 down into the 90s.
Right.
And it's at a long-term support level, but it's broken its major channel. And for me, I would stay away from Merck, except for one thing. Look at the real long-term chart going back 10, 15 years. It's at the bottom of the major channel that's been in place since 2009. So maybe it's a buy here with a tight stop. But I would say I never buy. My philosophy is never catch a falling knife. You cut your fingers. The bottom line is you cannot buy a stock until it reverses. It shows a new uptrend beginning. Just like if you look in like October, November, when it came down and turned around and went through the moving average, it was a great trade there for 6 weeks, where going from 104 to 134. But now coming down to support, if you crack support, it can fall away. It could just implode. So I don't know what's going on with Merck or why, but Bristol Myers and Merck looks just the opposite. And it
Yeah.
has to be individually, whichever stock looks best technically. That's the one I go with.
It's kind of like IBM. They're good companies that are discounted right now. Put them on your radar, but maybe not jump out there and buy them, right?
Yeah.
Isn't
And Novo,
JFK the guy who said that
Yeah.
isn't JFK the guy who said that vaccines cause autism?
Yes.
So how many people are going to want to take vaccines if they cause autism,
Well,
especially
he
kids?
didn't say all vaccines do. He said certain vaccines do may cause fat. By the way, just to change the subject, you had a question on NVO.
Yes.
This is a massive Head and Shoulders top, and it's on my box of shorts list. You take a look at the major channel break, the rally back to the neckline or kiss back to the shoulder line, excuse me, and then a rollover, and it's been nothing but down for what, 3 months now? Yeah. And basically, I don't see even an attempt at a rally here. Next support is 95 and then 88. And I believe you see those levels before this thing has a major turn. This is an ugly chart.
Is it a valuation squeeze? I mean, are they taking these stocks like Lilly and all them that ran up so big, so fast on the GPL1 and one shot will do it? But then if you don't take the shot, you're going to gain the weight back, which makes these people addicts for this thing for their whole life. So they still probably have revenue, but is it the valuations are being tightened up, you think?
You know, again, it doesn't matter to me. I look at the chart, I see a trend break, I see a snapback retest fail, and I see lower lows. This is just as bad as Novo, but it's at a support zone from early in the year that could create at least a bounce. And I'll tell you what, the quality of every bounce during a bear phase is important. If this stock bounces weekly on low volume, forms a kind of consolidation pattern, either a bear flag or wedge or something like that, it only has 1, 2, 3 down. That was a fourth wave. The fifth wave, to take this down to 600 and a quarter, 650, I would not be shocked. You know, was it overvalued at 995? Yeah, look where the stock was 5 years ago. It was trading at 80, so it went up 1,000% in about 4 or 5 years. Of course, it's overvalued.
You would say overall, biotech and the drug companies and pharma and healthcare, they're under pressure. And it must be, it's certainly the demographics still favor drug taking, but these guys are all coming down. And, are there, is it because of the switch in administration, you think?
I definitely
do.
I see Mark
think
Cuban's on TV with drugs or cost plus. He's out there trying to get the drug prices down, and then the government's going to be trying to get them down. And if your asset, if what you make revenue on is going to be slashed, I mean, that's probably why people are sell first and ask questions later.
I think biotech and healthcare is entering a new dark age, and you don't want to go anywhere near the sector until you find out what the new reality is.
Yeah, you got to.
But I think they're looking at a lot more regulation.
Yeah, totally agree with you. But by the way, I just wanted to interject something. I just saw on my news source that heavy bullish call activity in CCJ weekly November 61 calls. There's a lot of that whole sector is extremely hot right now.
Absolutely, and that's why we've been long since September. Actually, we've been long since February. We had a leap in February, and it went up 100%.
Yeah, I can see that. And right now, I always go with the industry leader. In uranium itself, there's UUU, there's URE, there's URA. But for me, the one, I mean, what you got to go with is the industry leader, CCJ. Just because to me, the best way to play a group is to play the industry leader.
What do you guys think of SMCI? Is it a bargain down here at $18, or is it because the people I listen to, these guys still have plenty of money coming in, and they got plenty of business, and they're very still in bed with NVIDIA in some way, shape, or form. So they're thinking, how can I get out of something that has 200% growth in revenue? And but
the
then
answer
again,
is
their accounting
woes
is fake. Is it all fake, or is it
we don't know, and there's never just one cockroach. Once you lose the confidence of investors, it's really hard to get it back.
Right.
I totally agree with John on this. From a technical standpoint, you got a little bounce here, but why would a stock go from first of all, a 10-for-1 split is never good for a company, because people will always sell a portion of their shares. But that's number one. Number two, to go from 117 down to 17 and lose 90% in 8 or 9 months, something's very wrong there. And the chart is telling me that, and I stay away from this. Now, from a technical bounce, can it bounce up to the high 20s? Of course. Can it get to 37, 35, 37? Maybe technically you can do that. But I would stay away from any stock. Why buy something in a downtrend that looks this bad when there's so many stocks in uptrends? That's my philosophy.
Well, and the bigger argument is they never justified a high multiple in the first place. I mean, what they make is a low margin product,
Gotcha.
racks for artificial intelligence servers. That is not a high added value business. NVIDIA is a high added value business. Making the racks that hold the NVIDIA chips isn't. But for some reason, this became an artificial intelligence play, got an artificial intelligence multiple, which was never justified. But you only know that if you look at fundamentals, perish the thought.
Yeah. Hey, let's turn over to that Bitcoin, guys. I like to have you ideas. Do you play Bitcoin at all, John? Or
ever since I started getting requests from customers on how to recover stolen Bitcoin, I kind of lost interest in it. And the other thing is that at the last market top, not a single Bitcoin expert foresaw the 95% decline in prices. So if you like Bitcoin, do it with your money. Just be aware that it can drop 95% in value at any time. At 6,000, I'm interested, and I did buy some Bitcoin at 6,000, which I still have. But for your average person managing their retirement funds, I wouldn't touch it. Otherwise, your retirement may be working at Taco Bell.
No, I totally agree. I totally agree. What I do in my room is we trade Bitcoin related stocks and exchange traded funds. Our biggest winner in the last couple of months, CONL. CONL is the 2 times long coin for Coinbase ETF. Take a look at this chart, CONL. And go in on the shorter. There you go. You see the base it developed after it came down, and see that the double top there at around the 36.7 range. Well, we bought it on the breakout day at 37 or 8, and 4 days later it was 73. When you get momentum in a stock like that, and even the pullback now filled the gap, and it's bouncing right back again. It's up at 428 right now as we speak today in a suspect market.
The bigger question is, after a Trump win, what's the next upside surprise?
Well,
the next upside surprise is they did that halving back in 2024, and it has a history of going up 300% after they do halving, and they've done the halving 4 times, and that would make this stock, this coin, go up to 150 grand. So it's still got 60 grand to go, and if it goes up another 60 grand, I would imagine some of these stocks have some upside, right?
But is the next halving before the next 95% decline or afterwards?
Well, you don't know. But I'll tell you right
now, you don't know exactly.
The target,
I don't know. Doesn't enter into my retirement strategy at all.
I hear you. No, and like I say, it's obviously a speculative vehicle, but it's a speculative vehicle that sometimes pays quite well. So if you can get in on the timing of it, and obviously people who bought it in the last 6 months certainly did, they're not too bad. I just wanted to throw a couple of stocks out there. Harry, a couple of ones that are peripheral. Everyone knows Mara, everybody knows Riot and MicroStrategy, but maybe they don't know stocks like CleanSpark, CLSK.
That's funny you say that, because in my room, it's one of my favorite. I call it a junior Bitcoin stock because it was an $8-9 stock. It's very similar in terms of pattern to CONL. They came down hard in July, August. They based out, broke out, retested, and broke out again. But this has got a big problem at 2021. There's monster resistance up there, maybe 5 tops at 21. And so I doesn't, and the underlying technicals are just okay. When you look at CONL, way better technicals and volume. So that's one of the reasons why I'm trading that. Yeah, it's a lot more expensive. And I do like Mara, but not lately.
What about HUT, HUT?
That's the better one of all the ones we just talked about. Take a look. It's broken through a triple top out of a big base pattern with volume and a run up in unbalanced volume too. So this is a very strong chart. I'd love to see if, well, right now it's gone from 8 3/4 to 28. It's gone up 300% in a month. So you got to be awfully careful about chasing a stock like that. I would rather look for some kind of consolidation or retesting, perhaps back down near the high 20, maybe $20, 2021 range, and let it flag in here. And then let's see if it sets up for a move. My next target could be in the mid 30s and low 40s. So the stock has a lot of potential and good momentum. It's the better of all the charts we just discussed. It's even better than Coinbase.
And this next generation data centers, IREN, IREN. Because
Yeah,
there's got
that's
to
a
be
big,
other players than the miners that are going to make money, right?
right. I mean, you also take a look at Lightbridge, which is supposedly in the same group. It's went from 2 to 14 and then pulled back, and it's got a perfect three-wave corrective falling wedge. It can easily be played with a stop under 570, but the upside is 9, 10, 12, 14. So it's got a lot of upside potential, and underlying technicals are very strong.
Some of these, if they're under $10, it's almost like buying an option, and because you can't lose more than the price of the stock. So the bottom line is, if you're comfortable with buying a $5 or $8 option, then you'd play it like that.
But again, the one I like the best in the whole group out of all of them is VST.
Well, yeah, sure. Yeah.
Very good chart. And, look at SMR. Check this out. What a powerful
Yeah,
chart.
SMR had a big spike. Did it come back at all? Not really.
It didn't really have a spike. When was the spike?
Well, I mean, the move it just had was pretty good.
Oh, yeah, from September low at 7, it went up into the mid-20s.
That's what I mean. So it never really backed off the mid-20s too much, huh?
Well, it did back off along the way. It consolidated and corrected because it ran up to 22 3/4. It backed off to 17 and a half. It ran up to 25. It backed off to 21. So now it's moving again. And if it breaks through this zone, my target is mid 30s. It's 25 now. This could be an $8 or $10 move. If it goes into a blow off phase, if you take a look at the long term move, 1, 2, 3, 4. This is the fifth wave of a long term move. And usually the fifth wave of a long-term move will end in a blow-off. This hasn't had that blow-off. I think the whole group could blow off. And if it does, and I mean short-term, you may see the stock go 5 to 10 points in a week or two. The same thing goes with VST, which could blow into the 180 to 200 range or more. And
I think with the Bitcoin, the big story is that obviously goes up after halving, and the other story would be is if it starts getting into global portfolios as an asset, meaning if it joins stocks, bonds, gold, commodities as an asset, a percentage of that type of asset base could send the market cap from 1.7 trillion, where it is now, up towards double digits. And that would also be a situation because, the ETFs are already out there. And Trump seems to be, obviously, he's got Musk in his ear. He's going to be promoting it. And if they deregulated the banks and corporations and insurance companies and everybody, that they could hold Bitcoin. I mean, it would be a situation where that type of cash coming into a market like that could well, obviously it'll get you maybe up to that 150 level, but on a longer term basis, maybe 5-year basis, you don't know where this thing could go because the purchasing power of the dollar has been dropping, and this stuff supposedly has a finite amount, and the new generation is more than happy to work with digital things. So I don't know. I'm just looking at a big picture. Like John likes to look at a big picture, like the financials and the takeovers and all that. I'm looking at a big picture of a modernization of transfer payments kind of thing. A little
digital currencies, right? I think that based on several factors technically, but the projections are 120,000.
Yeah, I mean, and it sounds crazy, and it's crazy it's at 90,000, and it's crazy when I read up how they make it, but crazy and the number, aren't coinciding. Now, John makes a good point. This stuff could fall out of bed and go down. They've had years where it dropped 72%. So what John's saying is I'm happy with the money I have. I don't want anything I own going down 72% ever. You know what I mean?
Oh, no question. But then that's what stops are all about. If you're in Bitcoin and you look at a support level on it, where's the chart? Is that the chart? Even on a short-term basis, I would be out under 85,000.
Yeah, it was a gimme above 62,000, wasn't it?
Yeah. Well,
Yeah,
at least above 72, because all those highs there are around
yeah.
72,000. But from
Yeah,
72,
62 was the first signal, 74 was the get going, you know.
yeah, exactly, and it went up 20,000 since then. So, but it's extremely overbought short term, very much like it did in beginning of 24 when it had that run up, that spike up, and then it went to a 1 year or multi-month side. How many months was that? About 7 or 8 months sideways basing pattern. It may have to
Yeah.
do that here. It may have to go sideways for several months and base out in the 80s and 90s, and then have a ramp up or a platform for a move to 120, 150.
Yeah, it's a wild one. Hey, John, I understand, again, you know, tulips are not your idea of a good time. So let's move over to some stuff you think might be good. We talked about the
Well, it's
financials.
not, you know, that it's not my idea of a good time. It's just there are better things to do.
Exactly.
You know, my whole theory is on Bitcoin is that you wanted to own it when there was an asset shortage and a cash oversupply. And that's exactly what we had when interest rates were at zero and you had quantitative easing from the Fed. When that ended, Bitcoin dropped 95%. So now you have a lot of asset classes that are cheap, offer great value, and have great long-term growth. For example, most of the banks have price earnings multiples of 10 to 15,
Right.
whereas most of the tech stocks are over 40. So not only is my new strategy out with the new, in with the old, it's sell expensive and buy cheap.
All right, John, I
So-
got a good question. I got a good question for you. I was looking at the tariffs on automobiles at the different countries, and clearly we're getting ripped off on the tariffs. So I looked at what Tesla does as far as total sales of cars, and I compared it to Ford, GM, and Toyota. And I say, these guys, Ford, GM, and Toyota, their valuations are like peanuts, and they sell way more cars than the other guy. If they do something with the tariffs, is it possible GM, Ford, or Toyota could be fantastic buys? Could we look at a chart on, like, say, let's start with GM. Is GM a $70 stock?
Yeah.
56. Yeah.
No, I'm saying, is it going to be a
only if you
$70
divide
stock?
by 10. You know, my view of the legacy internal combustion engine car companies is that they're basically large scrap metal deposits,
Okay,
that they have tens of billions of dollars tied up in machinery, which is useless or will be useless in the near future.
I got you.
So, you know, I have a number of customers from both Ford and GM who say, "Oh no, you're wrong. We have this new vision. Mary Barra's turning it around." But you know, the market just doesn't believe them. We
All you
have
got to do is look at the chart.
long in
All you got to do
Tesla.
is look at the chart.
You know, we have a triple long in Tesla, and I wouldn't touch Ford or GM with a 10-foot pole.
Well, I disagree to a certain extent. I think Ford and Stellantis, the terrible charts. But look at GM's chart. It's
I think
completely
GM's okay. Yeah.
Yeah, it really looks strong. And a matter of fact, on a long-term basis, it's approaching its all-time high, which is 67. While Ford languages and STLA, man, what's wrong with that? Take a look at STLA. It's
No,
a
those are
downhill
two
race.
bad companies, STLA and Ford. But I thought GM and Toyota, TM, looked fairly good.
So what's the
Uh,
fundamental long-term bull case for General Motors? Are they make their cars cheaper than electric cars? Not a chance. You know, what happens when the solid state batteries come around and your 1,000 pound battery goes to 100 pounds? You know, there's no chance of them competing with gasoline engines. So, you know, I just don't see the argument, you know, for GM, you know, on top of all the problems which they already have. I mean, heaven forbid they're unionized.
Well, that's
You know,
true
that
too.
creates a gigantic disadvantage for them right there.
No, you're right.
You know, Musk has fought unions tooth and nail from the very beginning, and they're all still non-union factories. Do you know why? They're all shareholders. All the assembly line workers are shareholders, and he's literally turned, you know, poor people into millionaires because they got the stock at $2.
Right. So anyway, moving forward to some other sectors, John. You like the financials, the banks, the takeovers, the people in financial services that are going to benefit, and then with regards to some selective tech.
The better quality tech obviously is NVIDIA, and Meta, and Tesla. And outside of that, the other stocks have kind of been moving sideways to nowhere, like Microsoft. So,
But
tech is
Amazon's starting to
getting,
get on their bicycle. Do you think Amazon's getting ready to go to 230, 240?
well, Amazon's at an all-time high, and I think it's being driven by artificial intelligence.
Right.
And I had a big position in Amazon, which I just sold because it had a, $35 run up.
Right.
But it's much more selective. It's no longer monolithic as it used to be.
A great chart.
Yeah, maybe the rotation will be into Google if Google can't, if it holds its support and starts taking out 180, 182, 185. Maybe there'll be some rotation out of some of these other ones into there.
Another area that probably will do well are small banks.
Right.
Because if you
Regionals.
get rid of antitrust, that'll allow the big banks to go up there and hoover up all the small banks. The United States is the most overbanked country in the world. It has over 4,000 banks. England has 5, Australia has 4, France has about 6. So, and this is a legacy of, our federal system, whereby individual states can hand out banking licenses. So
Hey,
you
quick,
have literally thousands of regional banks,
right.
which don't have the capital to exist
Right.
when there is a financial crisis.
Right. A quick question before we have to shut down. International, John, any country look interesting to you?
None.
No, they've all been
we're
on the
about
run.
to launch
Ever
a
since Trump
trade
got in
war-
there, they're all on the run,
Yeah, if we're about to launch a trade war,
Yeah.
on our biggest customers, that's
Right.
terrible for business.
Right.
How much? You tell me how much we're raising the tariffs on these countries, and I'll tell you how much they're going to go down.
And also, like I say, the economies of Germany and China are not exactly robust right now. So then if you obviously squeeze their margin, that can't be a good thing either, right?
And, Germany is another aspect of the EV trade. They were very late into EVs. They're still heavily dependent on internal combustion engines, and it's basically dragged the entire economy into recession.
Yeah.
And now they have to worry about competition from Chinese EVs, which are eating their lunch. So it's been an awful performance for the last couple of years. And the only advantage they're going to have is a cheap currency.
Yeah. Well, and talking to currency real quick, what do you think of the yen?
I think the dollar stays strong for years as long as interest rates here are higher for longer.
Right.
You want to own the U.S. dollar.
If these yields aren't going under 4% on the 10-year, then the dollar remains pretty strong, right?
It's more likely that the yields go over 5%.
Yeah.
For a while and then stay there.
But as long as it stays above 4, at least you feel like there's some base to the dollar.
Well, which rates are you talking about?
The 10-year. The 10-year yield.
Well, the 10-year right now is around 450.
Right. So I'm saying if it stays above 4, even if the dollar got choppy, it will still probably be a strong place to be. If you started seeing 3.5, if you started seeing 3.5 again, I don't think that'd be good, right?
Yeah, no, absolutely. The dollar, what's going to happen is in coming months, you're going to get an out of the blue inflation number, which is absolutely through the roof because people aren't waiting for Trump to get into office to raise prices. They started raising prices on November 6th.
Right.
So when that feeds into the data, we get an upside shock on interest rates. That destroys the bond market. It destroys the real estate market. It destroys anything that's interest rate dependent.
And 70% of the economy is consumer spending, and he's going to go to great lengths to make sure consumers have more money through less taxes and everything else. So if they got more money in their pocket, we know what consumers do with it. They spend it, and of course that's your propelling is the more money in their pocket.
You know, never underestimate the ability of the American consumer to spend money. You know,
Right.
I've heard of endless predictions that consumer spending would decline, and it's in fact gone up like a rocket.
Well,
So
David, do you want to put the contact information up there for Harry and John? So those that are listening could contact both of them. And because obviously they're both very sharp guys, but they do different things. So it's kind of a good match, actually. Harry and John have been around forever, and they know how to pick stocks. And so they both have different ways of approaching it. So contacting both of these guys makes an awful lot of sense.
Yeah, I just posted their sites in the chat, so yeah, be sure to check out Harry Boxer at thetechtrader.com and John Thomas at madhedgefundtrader.com. And then of course your site at optionprofessor.com. So do you guys have anything else you want to add?
Well, the only thing I wanted to add, it was nice to find out that Harry's from Cliffside Park because I'm a Don Bosco prep guy from up in Ramsey. So
No, actually, I'm from Hillside, New Jersey, not
oh,
Cliffside.
Hillside. Okay. All right, guys. Well, it's nice talking to you, John and Harry, always. And David, I'm going to send it back to you.
All right. Great panel discussion. So for those of you who are new to timing research, we do this every week at 1 p.m. Eastern time on TimingResearch.com. So be sure to join us for that every week. So, right, that's it.